Good afternoon, welcome to Market Route number 212, APW, Stuart Williamson here at the helm. This week we're going to be covering the Zoopla House Price Index report for May. Now the executive summary, very simply, is UK house prices are unchanged over the last 12 months, prices rising across all areas of the last quarter, and the annual rate of price inflation remains negative across the south of England, but rising more elsewhere. Home buyers and sellers are largely undeterred by the election campaign, which is quite surprising because I'd have thought people would be put off by it. Demand is 6% and sales agreed at 8%, both higher than last year. So that's very positive. 75% of the 1.1 million sales projected for this year are either complete or in the sales pipeline, and we calculate UK house prices are currently 8% overvalued. So that, to come from Zoopla, is quite contentious because normally they are good news merchants, like a lot of these people are. So to say that they think it's overvalued, but again, it's a regional approach. I think we stated last week that properties on the coastlines are falling by about 6% because they went up so much. You know, I have a place in Whitby in North Yorkshire. It's absolutely bonkers, the prices that people were willing to pay in our terrace for a house. So it needs to be revalued. Some of the areas that aren't overvalued are places like the country around Birmingham, Manchester, Nottingham, those sort of areas, because they were quite undervalued beforehand. So they have done very well and are on a par now. Overall, it is, with the whole stock, about 8% overvalued, and the UK house prices there are on track to be 1.5% higher for 2024. The quote from Mr. Donnell, who's the executive director, says, "The housing market continues to adjust to higher borrowing costs. The summer slowdown is now arriving, tempering activity. Timing the first cut in the base rate will give a boost to market sentiment and sales activity." Now, on the back of that, I was looking at a survey report yesterday from Deloitte, and they did a 5-year analysis of where they thought interest rates would be over the next 5 years. And they expect interest rates to average 3.5%. So that to us as international people would give us a 4.5% average interest rate. And if you compare that to the average rate of return we get on rental, which is about 6% plus, that would still allow all costs to be covered and to cover the cost of your mortgage. So that's the most important thing, I think, to think about, is that interest rates will come down after Keir Starmer wins the election, and it's pretty obvious he will. Interest rates will come down and we'll have a bit of a bounce. So very briefly, I have a little bit more on each of the topics. House buyers and sellers shrug off election. The recent pickup in sales market momentum has continued over June, although it is slightly slower. New sales agreed are still running at 8% higher than that a year ago. Okay, we are seeing a little bit of a slowdown, but also we're getting into the summer, you know, and already people are going away on holiday. They don't want to sell during that period. They'll then come back in September, and that's when it'll happen. You know, there used to be a great saying in the stock market world, buy in May and go away. And that's exactly what does happen. People will do their trading on property in May and then go away and start again in September. So that's where the market is at present, but it's still active. House price inflation is static and negative in the south. Improving sales volumes over H1 2024 has led to a firming of house prices, which is reflected in the house price index. Now I'll come on to that. The actual house price index, if we look at locations that are in the positive, we have Belfast, which is unfortunate for us because it's very difficult to get mortgages over there. Very good for people in Belfast. That's at 3.4% growth. Manchester's second at 1.6%. And I did see a Jones Lang LaSalle Savills piece of research. They're saying that the northwest, which is Manchester, Liverpool, those areas, should go up by 28% in the next 5 years, which is super high. That's what the research is showing for them. And Manchester, even though it's been going for 12 years, is showing a good engine still. Sheffield 1.3, Glasgow 1.3, Cardiff 1.2, Liverpool 1.2, Newcastle 1.2, and in Birmingham 1.1. So that's the house price index. That's how things are going up over the last 12 months, which is very positive. And then other points, 75% of all the sales are complete, so it looks like we will hit our 1.1 million for this year. Sales market has been very resilient. The housing market has been very resilient over the last year given the rise in mortgage rates. These averaged 2% in late 2021 and stand at 4.7% today, spiking well over the 5% we had in October. So that's positive. Housing remains overvalued, as I said. Interest rates hold the key. So as soon as the interest rate starts coming down, we'll see it. There's a direct correlation between inflation and interest rates. If you look at the report I mentioned earlier on, basically inflation was at a high point, interest rates met it, inflation has now fallen, but interest rates haven't. So they must come down, and they will, and we will see that by the end of the year, beginning of next year. So overall, what can we say about the The UK housing market, it's pretty flat at the moment. It's becoming more affordable, certainly in the southeast because it's going down. I think London is probably pretty close to getting a turning point where we could see some movement, and the rest of the country is still fine. So it's a case of where you buy is buy somewhere steady, somewhere where there's, as we call it, pies. Okay, population growth, infrastructure development, strong employment. If you have those three things, then you should do well on a property front. And remember, if you're not thinking about it for 10 years, don't think about it for 10 minutes. That's it for now. Thank you very much for listening. Do like, subscribe, leave some questions. You know, if you think what I'm talking is rubbish, say so. If you think it's good, happy days. Thank you very much. Cheerio.